Louise Bedford here, the host of the Talking Trading podcast. This is how traders excel. Now, quite a few years ago, while I was working out at the gym, a guy in his mid to late 70s approached me and he said, "You're a strong girl, but I could make you stronger." And I thought, that sounds interesting. And there he was doing 3 exercises. He was doing a deadlift where you pick up a big bar from the floor with weights on either side. He was doing a bench press where that's the one that often the guys head for. And he was doing squats, and that's all he did at the gym. Now, Reno became a great friend of mine, and Peter Cook, who was also a world champion powerlifter. These 2 guys, mid to late 70s, they were astronomically strong. And I have been searching for somebody around the world to come on the show and to talk about the mind of the athlete and how that combines beautifully with the markets. So I have found a champion powerlifter to interview who is also a trader. Welcome to the show, Darrell Martin.
Thank you for having me on.
Now, what I thought we could kick off with is some lessons that Reno and Peter Cook, who they were both my trainers in powerlifting, they used to give me some one-liners, and I would love your thoughts on this, their comments around trading as well. How do you combine this in your mind? So I'll give you perhaps a bit of a clue about how I'd like to kick off. So they used to tell me, don't whinge about that weight being heavy. Watch what I do, copy it, don't think, just do it. Now, as a trader, I think there's a lot to be said for that. How do you think that works for the markets, Darrell?
Well, for the markets, you got to trade what you see. You don't trade what you think. That's very important that you literally trade what you see. And your thought process should have already been done way before that. So then you have to react, and you have to do so quickly and instinctively. So you gotta, you see it, you put on your trade, you have your risk management in place, and you execute. Oh, and a lot of traders, the big mistake they make is they try to think about every single trade, and then they take the bad ones somehow, and then they don't take the good ones, right? And then they get in this bad cycle of, constantly taking the wrong trades because they're overthinking it.
Yes. And these 2 guys also told me, don't think about the weight that you lifted yesterday. Just focus on what is happening right here and now. What are your thoughts about that?
Yeah, my coach, 2 things on that. One, my coach, I remember, would actually, when we were at competitions, we didn't know the weight. He would actually say what the weight was and tell them to put that on. We had no idea what we were lifting. He's like, you can lift this, don't worry about it. And we'd lift more than we ever thought. I think in trading, you can't carry in yesterday, even if you had a great day. You can't, because if you get the "I'm the king of the markets" attitude, then you make some really stupid mistakes.
Absolutely. Oh my gosh. That's good advice.
Yeah. And if you have a bad day, it doesn't mean that you're the worst trader in the market. But if you go in and you try to make back that day, and your goal is not to trade well, which I always say, trade to trade well. Like that, not to make money, right?
Yeah.
If your goal is to revenge trade and make it back and get back there, and you have all this weight on you, you're going to see things that aren't there. You're going to make up trades. You're going to oversize, over leverage. You're not going to get out of your stocks because you got to make that money back. So you can't take that loss. So you definitely, not only every day, but every trade has to be its own trade.
Absolutely. They also told me that if you have done a personal best, which is the heaviest weight that you've ever lifted, take the next day off.
Yep. I think it can actually be really wise because, one, rewarding yourself. And it is hard for traders to reward themselves. They'll make a bunch of money in an account and they won't withdraw any. It's crazy. So withdrawing money is one way to take a day off. Buy something nice for your spouse, yourself, your kids, your parents, whatever. So I think one of the ways you take a day off, you could take a literal day off, if you had like your best day ever and soak in it and enjoy it, and maybe meditate on it a little bit. What did I do that I haven't done before so I can repeat it? But I think one of the biggest things I can say is, if you have a personal best day, take some money out and go have some fun.
Oh, yeah, you've got to reward yourself. Absolutely. I think
Yeah,
that's a
yeah,
real key. Yeah, it
yeah.
doesn't necessarily mean buy a Porsche, but certainly buy something that you can
You
enjoy.
might, but yeah, but yeah, get paid to trade is what it means. Yeah,
I was also training with another couple of ladies there. They trained all of us, and it was such a good camaraderie between us all. And I was the littlest of these other ladies. And the idea where they'd say to me, don't compare yourself with the others, aim for what you can do. How does that relate
right.
to the markets?
Yeah, we did the same thing in training. We would, when we lifted, like a lot of times I would go for endurance. And so I was lifting a lot of much lighter weight than I was capable of lifting, you know, and people would be like, what are you doing? Cause they knew I was stronger, and they're like, they thought they were better somehow. It's like, it doesn't matter. It'll come down to it at the competition. A lot of traders, and I see this a lot with my company, they want like a leaderboard, like who's making the most and all this stuff. You want to compare that. You can't do that. I mean, you have to compare yourself to yourself, and that's it. And you are trying to get better than you were yesterday, than you were last week, than you were last month and last year. And never compare yourself to other traders. You don't know what the circumstances are. You don't know it's not like you're on equal playing ground. They may have, a super fast line and a system they spent 30 years developing and an account 10 times the size. And, it just doesn't matter. Like, what matters is that you improve upon yourself.
Yeah, I think there's brilliant lessons here. And the good part about this as well is that, Darrell, I'll introduce you officially now, that not only have you got that background where mindset really counts with a sport, but you also know what that means to apply it to the markets as well. So, Darrell, I'm going to give a little bit of background about you, but I want you to fill in some blanks for our listeners. So I know that you're a former national powerlifter and that you're the founder and CEO of Apex Trader Funding. Now, that's a prop
Yes.
trading firm, and we're going to discuss what that means in just a moment. Now, the
Yep.
things I've really enjoyed about some of the aspects that I've learned about you is that you focus on a lot of the things that I focus on for my traders as well. Consistency, thinking about your stress levels, being able to focus on the present. All of these aspects can make the biggest difference to a trader's results. Now, Darrell, what other aspects of your background should we be telling people about before we kick on with some other questions?
Well, I've been a trader for over 15 years, about 20 years now. I actually, when I first began trading, I took my first year to spend that time learning before I ever traded a live money. I started with $3,000 in my wife's teacher retirement account. I pulled that out. So that was definitely risk capital. And then I was able to, 2 months after I started trading, now remember this is a year in. Okay. I was able to quit my day job, become a trader. I started recording videos on how to trade for my daughter, who was just being born, and wanted her to have a way to learn how to trade in case something ever happened to me. And one of my friends got a hold of those videos and I asked for them. And he's like, let's turn this into a website. And I never literally even crossed my mind to do that. And we turned it into a website, and it grew into a large company. And out of that, we're in 150 countries now. And out of that was birthed a new company, which is the Apex Trader Funding Company, which now allows traders to come in and not risk their own capital, but still be able to partake in the profits.
Yeah, that's amazing. I'm loving how it's provided such an opportunity. I think the markets can be such a great equal opportunity employer, and the people who really commit to this can just open up doors. Now, I know that you're more of a day trading, short-term type of trading fan than I am. Perhaps you could
Right.
describe more about to define day trading, first of all, and why you feel that it's a viable strategy.
Okay. Well, one, I'll say that day trading and longer term trading, if you take out all the long-term economics of stuff or whatever, right, is the exact same thing. If I showed you a chart of a day without the minute markers on it, you would be able to tell the difference from that and a 1 year chart. Okay. So you are making decisions just faster, but the charts look the same. Okay. But another thing is if you trade what's called futures, which is what I trade, I like it a lot better than stocks. So there's a lot of benefits and edges that, we can go into for hours, but you can go in and you can trade 23 hours a day. So the markets are from 6 p.m. to 5 p.m. the next day. So no matter what your schedule is, you could trade. And so that was a big benefit to me, of course, trading, like having a job and trading. And, now it's like I can literally, I can start here in an hour for, and trade, or I can do it before I go to bed or when I get up. My son comes home. He likes to trade. He's 11 years old. I taught him. And so he'll come over and make money for Fortnite and all that stuff. And, he can do it when he gets home. Just so you can do it when you get home. You can do it late at night. You can do it after the kids go to bed. You can do it early in the morning, whatever. So it affords a lot of opportunity that stocks don't necessarily afford you because of the restricted hours are usually work hours. So depending upon what exchange you're trading on. So, yeah.
Yeah. And what about when you've got that short-term time horizon where you're having to make so many decisions? How have you found that's impacted traders burning out and decision fatigue?
Okay. So that is really important, is you are making decisions really fast. And I'm usually done within 2 hours. So a lot of people think day trading is sitting in front of a computer for 8 hours a day, 23 hours a day or so. 2 hours is a long day for me. I'll sit down. Sometimes I'm done in 30 minutes. I try to have 3 net profitable trades and then I'm done for the day. So, or if I just get one big banger, that's a, nice, huge trade, I'm done for the day. I don't need to have 50 trades. It's not the quantity of trades. It's over time, the size of my trades gets bigger. So I make more on the exact same amount of work, but not like, I got to make 50 more trades so I can hit that goal today. Like, don't try to hit that goal today. Just because if you keep trading after a couple hours when you're day trading, then you will again make bad decisions. So you have to have a couple hour time limit, in my opinion, to do it well. Now, some people will go on and they'll turn it on to simulation mode and then they'll trade some more. Now, again, they're still going to be tired. So they're not going to make the best decisions, but at least they're not trading their real money in because they want to keep practicing.
Yeah.
So I recommend not doing that too much because, again, you don't want to get in a bad habit of making bad decisions from being tired on decision fatigue.
That's a really good point. There's some research that has come out about judges and how many of the people that are coming to see the judge end up being granted parole. And apparently, here's a little bit of the backstory for you. Once the judge is fresh, they're more benevolent and they say, sure, I'll give you parole, no problem. But then after lunch and in that kind of 3 p.m. type of time frame,
Really?
they are getting tired themselves. They need a bit of an energy boost and they're just going, no, you're going to rot in jail. So that even
wow.
So
if you ever get thrown in, make sure you get the early morning period.
Get the early morning shift. That's what
I was thinking it might be the reverse. Like the fatigue, he may just be like, whatever, you can go. But no, he's like, no, you're staying. So,
that's it. That's it.
Wow.
Yeah.
That's
I've
interesting.
definitely found with my own trading as well that depending on whether I'm fresh, it has an impact on how many of the trades that I take. So if I've got like a lot going on in my life outside of the markets, it can really interfere with that decision-making process. And I think that's something to consider. Is that something
those
that
are days to take off. Yeah.
Look at? Yeah.
You have let's just say a fight with yourself.
Yeah.
Or, you're just having a bad day or you're not feeling well, take the day off. And you have to, it's a discipline thing. Again, as a trader, you have to be disciplined. And one of those disciplines is if I'm not at my best, I'm not pushing buttons because I'm not going to be any better or in any better of a mood after I lose a whole bunch of money. So, that's, definitely you got to learn when you should not be trading.
Yes. And there is that concept of mood tunnel. So there's a researcher who's a meditation teacher, Jeff Warren, and he talks about this mood tunnel that once you are crabby, then everything that you see from then on in the world, it can be the most beautiful flower and you'll go, it's going to die one day. You put that mood tunnel onto future events. And I see that happening with my traders as well, that when they're euphoric, woohoo, everything's fantastic, every trade is going to cooperate, which of course they don't, and you and I know that. When they're suffering, then they're more likely to not only shoot themselves in the foot, but also reject perfectly good trades. So I think our goal here definitely is to be balanced and to be objective, to handle everything with that purity of thought rather than swinging through that utopia to depression side.
Right. You don't just tough it out. Yeah. You chill out and come back. Yeah.
Yeah. And that comeback, I think, is important too. Darrell, I've had some traders who are always chasing that shiny new market, that shiny new strategy, and they chop and change. They switch so often, they don't give themselves time to absorb the lessons from that market.
Yeah.
And have you seen that as well? Is that something you've been
I see it all the time.
Yeah.
What's the new shiny object? What's the new shiny? I found this on the internet. I found this. Oh, somebody said something about that. 5 people said something about this on Facebook. I should be doing that. Next week, 5 people say something else on Facebook. I should be doing that. I'm just like, pick a strategy, work with it, develop it, take what you like out of it, throw out what you don't like, and then you can work on developing it in coercion with another good potential strategy. But if you're just hopping and hopping and hopping, how would you expect any consistency?
Yeah.
And you're not going to master a strategy in a day or two. If you can, it doesn't. I mean, if you can master the strategy like in a day, it doesn't work. It just doesn't. The markets are not that simple. I would say the markets are not as simple as you want them to be, but they're not as hard as you make them. And
go back to that. That's gold. Say it again.
The markets are not as simple as you want them to be, but they're not as hard as you make them. So, and it's like, so it's not a one-day strategy, that you're going to learn, but it doesn't take 5 years either, but it takes finding the right thing and being disciplined about it. And that's, I think that's the hardest thing for a trader, is to be disciplined and patient.
Yeah. One of the techniques that you can try for this, if you're listening to this and you're thinking, yes, I have chopped and changed markets. One of the aspects that you can try is referring to yourself in the third person. So instead of saying, I am in the markets, you say, insert your name is in the markets. So you step back just that tiny bit, that little pause between when you make a decision and when you implement the decision. That is where the gold lies. And if you can look at your results with that same objectivity by saying, let's look at Louise Bedford's results now, but insert your own name, if that can give you that almost a CEO type of view with results, which I think can be useful. Are there any other tips that you can think of to get objectivity?
I can build on that. I actually use what I call it a trifocals method. Okay. It's where, you have you as the trader, but then you step back and you go, when I'm reading the markets, I go, okay, if I would have entered there, where would I get it? Where would I take my stop? Where would I look to take profits? Okay. So now what would a market mover do? They're looking at the same chart. They're going to go, all these people who enter here are going to get out here and they're going to take profit here. So how can they take advantage of that? And then I go, okay, so now what should I do? Not doing what I think I should do, but doing what I should do now based on what I see that the market, because however I would react is honestly how 98% of other people are going to react. So market movers that can literally push markets, and they have to push to where big orders are so they can unload their positions. They know how to look ahead like that and think how 98% think. So that way they can move the market to where their positions are at. So if you can do that, you can actually be one step ahead of making decisions in the market, and you won't put your entries and your stops in the worst possible spot.
I love that. I think there's so much wisdom to be gained by taking that step back and getting a little bit of space. So often we're feeling pushed to make fast decisions, But
Yeah.
when you actually look at your most profitable trades, and I do suggest a lot of traders go back if they've already got experience, go back and look at those profitable trades and try and deconstruct them, work out what drove you to make that trade. What were the things that really worked for you? Don't just look at the ones that don't go well. Look at the ones that
Yeah.
do go well also.
Yeah. Look at what I did well so I can repeat it. Look what I did wrong so I don't repeat it. I'll even tell people get a voice recorder and talk out loud your trades. So as you're doing your trade, like, what are you thinking? What are you feeling? Like, literally say it out loud and then go back and listen to it and go, oh, wow. Like, I mean, it's eye opening. Do that for 30 days and you'll learn more in 30 days than you will in 5 years of trading because you're going to learn all about yourself. And it's like, just be as honest and raw as possible. I'm thinking this because of this and I'm getting out here. Okay. I took this trade honestly because I was really pissed off that I lost the last trade. So I added in like double the amount of contracts. And then it hit me. And then I want to take another trade to get it back from there. And then I felt hopeless. And then see, you're going down that spiral, but say it out loud. Don't just be on an island. And that's that CEO perspective. Because now you can step back and look at yourself as a third person by listening to the recording.
That is very valuable. I haven't done that. I'm going to try that. I am very much a fan of the morning journal. So I've got like little books all over the place. They're usually quite pretty because I try to keep them attractive. But I write down my thoughts every day. And then occasionally I'll go back and reread my thoughts from like 5 years ago on the same day. It's amazing how often recurring themes happen.
Yep.
And you don't actually realize that we cycle through, oh gosh, my sister's really annoying me. I can't believe how much my sister's annoying me. 2 years go past. My sister's really annoying me. I can't believe how much my sister's annoying me. Traders do the
Right.
same thing. They have at their fingertips so many tools they can use. And if they don't use them, if they don't introspectively consider the implications, that can actually lead to difficulties. Yeah. So tell me more about prop trading. I know a lot of our listeners won't be familiar with this term. Perhaps you could define it first and give us an idea about how that works.
Yeah. With us, it's very simple. We're actually the largest platform in the US. And we actually got the #1 award for being a prop firm. But without getting into too many details on that, what it is maybe you don't have the money to trade. Maybe you don't want to risk your retirement or your mortgage, or you call it savings accounts or the food bill, or for whatever reason, you don't want to risk your money trading. Okay. And obviously there's a lot of good advantages to that. And so you go with like an evaluation prop funding firm. And so what we do is we have an evaluation that you take. It's like, $100 or $150. And you got to make like a $50,000 account. You have to make $3,000 without losing $2,500. Okay. And you got to trade for at least 7 days. All right. And if you do that, then you pass. If you don't do that, then you just go back and pay the ticket again. You reset. Okay. So it's not a big deal if you mess up. Then once you get funded with us in a performance account, we actually give you 100% of the first 25,000 that you make. And then we give you 90% of your profits after that. If you blow the account, you just go back to the evaluation. We can copy your trades. We can multiply your trades. So let's say you're a really good trader and you're in a really liquid market. We may trade 10 contracts when you're trading one because you're a good trader. So people ask you, how do we make money? So it allows you to come into the market with, and I think a really good headspace because you're not worried about the risk of ruin of you financially. I mean, if you put up $150 and you blow the account and all you got to do is put up $80 to start again, that's a lot better than losing $2,500 every time. Or we have bigger accounts that are $7,500 that are $80 to reset, and that becomes very expensive, very addictive, very bad behavior, So this allows you to trade almost in the benefit of demo, but with the ability to actually make withdrawals. So whereas when you're trading live, you could lose it all or you could make it all. So everything cuts both ways. It helps it not cut both ways so much because you're never investing. and you don't ever get in trouble. You don't ever have to refund the account. You don't have to pay us back, nothing like that. You are not liable. Like, the whole, you can lose more than what's in your account warning that they put on
Yeah.
there.
They're
You
terrifying.
can't,
Yeah.
you can't do that with us. You're not ever going to get a margin call from us saying you owe money. We may just say your account's been closed. You got to start a new evaluation.
Okay.
So if you're wanting to get into trading and you're not wanting to take on all the risk of trading, then we're obviously a very good model for you.
I'm liking that. I guess the thing that is going through my mind as a bit of a thought bubble here is that the majority of the money that I have made in the markets has been from that medium to longer term perspective. So the
Yep.
shorter term has been fantastic for income, and
And
those,
that's what it is.
the short term view that you have when you're using perhaps 4-hourly charts. That's one of the things that we've emphasized with our traders, for hourly charts in very liquid markets, being able to trade long and short, which means making money from a trend going up and making money from a trend going down.
Definitely.
That gives you the potential for income replacement. But the majority of the money that our traders make, because I see a lot of their results and I know my own results, is in that medium term to longer term view where you hang on, and it might even be 36 weeks. It might be 3 years that you're hanging on.
Right, exactly.
Trend.
So that's where you're building a portfolio.
Yes.
And so, but one of the nice things is if you're bringing in income, one, you can pay bills. Two, you can add money to that longer term strategy. You can go in, I really like the stock or whatever, I'm going to buy another 1,000 shares. Well, you can't do that if you're just holding. There's no money to go in and add into your position. And if you close it and it comes down and then it's cheaper, now you can buy more shares, right? But that has to happen before you can do it. If you're trading where you have income coming in, then if you do make income, then you're able to take that income and purchase more shares, add into your positions. It can be part of your longer term strategy.
Okay, I'm liking that there's a more balanced approach that doesn't have to be one or the other. Yeah. That's the aspect. And then how much does timing make a difference? Because with short-term trading, one of the things that I could imagine is some of the people coming into your stable of traders would get unlucky and they'd hit a few losses in a row and then bang, they haven't hit their target. How much does that play in terms of a trader's effectiveness overall?
Well, a trader is going to have to be profitable and consistently profitable. They have $2,500 of wiggle room, like on a $50,000 account. The easiest way to not hit that quickly is trade smaller. And I think you should take 30 days to pass the exam. Don't try to do it in 7. The biggest mistake they make is they try to do it in 1. And so they trade too big. They try to be so good at, you have to be really good at timing to do it in 1 day, 1 trade, right? So go in, back up, slow down, let yourself be wrong because you trade small enough that it doesn't destroy you. If a trade hurts, then you traded too much. If you literally, if you are afraid to push that button again, you traded too much. You traded too big of a size. You risked too much money.
Yeah,
Or
I
you
think
broke
that's
the rule
good
or something.
advice. Yeah, if you can't sleep at night, you're doing this wrong.
Yeah, exactly. And one of the things about day trading, by the way, is you do sleep at night really well because you're always flat. So you don't have to worry about anything happening to the markets overnight and something exploding. But
so your definition of day trading is in and out on the same day?
Yes, in and out on the same day, in and out within minutes often.
Yeah.
So and the leverage is a lot bigger than stocks. So if you make 10 cents, you may that could literally be a $125 move. On just one contract or whatever, or $100 move, like on gold. If it moves 1 point, which is 10 cents, 10 cents, then that's $100 move. Well, gold moves many points on most days. So you go in and you do that a few times a day, you're making $300. You don't have to get a big move. Over time, and $300 doesn't sound like a lot, but $300 every day does add up. Over time, let's say you're doing 2, 3, 4, 5 contracts. Well, now $300 is $1,500 and just a 10-cent move. So you don't have to get huge moves, though huge moves are nice when you get them. And you don't have to trade for a long time. And you want to be in and you want to be out. I mean, the sooner you're in and out, the better it feels. I'll tell you that. So, and I mean, like I said, 10 minutes is a long time for a trade for me. I don't usually need that long for it to move that much. So
Mm.
now that all comes down to what market some markets move really slow. Some markets move really fast. So on the really fast markets, like 5 minutes is a long time for me. So it depends.
And it gets back to universe selection too, with what you're saying about choosing the right market based on your temperament. So things like if you're going to trade like a 2-minute chart with candles, which is, I love candlesticks as a strategy, then you really have to be on during that time. You can't have that downtime. I'm interested as well in that spread of winners to losers for your traders. I find that, keeping in mind I have a more medium-term view, so I find that every year it's only 2 or 3, maybe 4 that are traded that make the bank for the rest of the year. And all of
Oh,
the
well.
others are either break even or they're okay, but they're not real knock it out of the park. Does the same thing happen with the spread of returns for your traders?
Well, some of them, but it depends on the strategy they use. If they're more of a scalper, which is like going for like 10 cents or whatever, then they should have a much higher win rate. Because think about it, it's, in my opinion, I guess I put it this way, it seems a lot easier to pick a very short-term move than it does to pick a long-term move over months. So to me, I can look at the chart and go, hey, there's momentum of it going up. I can grab some of that and get out and be done. That seems a lot easier to do to me than it is to go, I think this stock is going to be here in a year. I mean, so many things can happen, where this is just momentum trading. You're just trading price action on the chart and volume.
Yeah. So what we're talking about here is the development of a sweet spot. That sweet spot is the thing that you relate with, you understand, you are drawn to, that suits your temperament. And I think that's something that a lot of traders who are chasing that shiny object, they never hang around long enough to find that sweet spot. And that is a tragedy. Once you've got your sweet spot, it is a much simpler process because you've got your systems in place. You know how you're going to react. You know which results to focus on, and you know how to course correct, how to adjust your behavior to sink deeper into your sweet spot. A lot of the time I'm telling traders, okay, you're trading 6 markets, you probably can only handle 3. So after
Yeah.
that, you're chasing money for chasing money's sake, and it's not going to actually represent
Yeah.
itself.
You want money chasing you, not you chasing it. Yeah.
Oh, nice. I'm loving your one-liners. They are very good. So how does the mind of an athlete convert into effective trading?
Athletes are disciplined. They show up on time. They focus on a specific sport and a specific, part of that sport. Like I trade 1 to 2 markets and that's it. And 90% of the time it's one market. Athletes are out there playing, 20 different sports, right? They know their training regimen. They know what they're trying to accomplish. Their goals are set. They know when to start training. They know when to stop training. They know, when to compete, and they know what their goal actually is. They have a very specific goal, sometimes for the day, sometimes for the year. And we have all that as a trader. We got to be disciplined. We got to be patient. We have to be, willing to execute. We have to show up. We have to show up in our best mindset. We have to be focused on what we need to be focused on. I mean, the list can go on and on, but yeah.
Yeah, I think often that halo effect, we forget sometimes that the things that we've done outside of trading, we can convert that success into the trading arena. So any of the high performance endeavors, whether you've learned an instrument, whether it's how to sing, whether it is being in an athletic pursuit, I think there are lessons there that can convert directly and improve your success as a trader. And do you find though as well, I'm going to finish on this because I'd love to hear how people can get in touch with you in just a moment as well. But often with powerlifting, once I got to twice my body weight for a deadlift, it was almost like I couldn't believe I could go any higher. And I really didn't. That was sort of my set mindset cap. So I
Right.
found that to be interesting, that I think I talked myself into not being able to go past that personal best.
Right.
So day traders, the stats are that 97% of day traders lose money in less than a year. Day traders lost $1.14 billion during the pandemic. Now, those stats are scary, and that can cap somebody's thoughts about what they can achieve. I'd
Right.
love to hear your ideas about overcoming a barrier like that seems so big and hairy and obtrusive that you don't think you can cut through that.
Well, I would think, one, just relaying on the loss is the benefit of our company is you are not the one losing it. Right. So you're not risking your capital because there's no investment. So that really helps with that mental block of, oh my gosh, day traders get destroyed. I don't want to do that. We paid out 8 figures last month to day traders. So, it's something that we're very proud of to help out. And so we definitely have people that are doing it. Is it a minority? Yeah. But again, the people that aren't, that are, going back to the evaluation, back to the evaluation, and back to the evaluation, it's a lot less expensive. And so, if you have that mental block and that's why you haven't done it, then this affords you that opportunity to do it. And, you can always go further than you think you can. You just got to be willing to believe that you can.
Mm. It sounds like a great place to land the plane. Darrell, how can people get in touch with you?
Go to apextraderfunding.com.
apextraderfunding.com. Fantastic. Any parting words, Darrell?
This was definitely a very fun interview. So I enjoyed it a lot. I appreciate you having me on. Thank you.
Oh, absolutely, Darrell. And look, I just adore doing these interviews. It's so much fun to introduce you to my traders. I have so much fun preparing this show. And for everybody listening, if you think there's somebody that could benefit from learning about the psychology of market, learning how to excel, learning how to really get your head around this trading game, please refer them to this show, because I think listening to Darrell Martin will give them a big buzz. It'll top up that friendship balance in that love bank. All right, until next week, happy trading.